Welcome to Money with Mark Albert. Really appreciate you being with me today. Today we're going to look at an update from the federal government, their budget from March 2019. They have an update on the first-time home buyer incentive. Now this is a big deal in the mortgage industry. This is a big political issue. You got the primary parties having their own position on it. What we're going to do today is look at what the current federal government, how they've updated it, so that as you plan, you could respond appropriately if you're going to participate in this program. So, to clarify, it's a shared equity mortgage. It's you're sharing the cost of buying the home. The cost is shared between you and the government of Canada. And they're doing that through CMHC. CMHC stands for Canada Mortgage and Housing Corporation, and it is, in fact, the federal government. It's an arm of the federal government. It's a crown corporation of the government of Canada. And so you're partnering with the government here to purchase your next house if you're a first-time home buyer, if you want to participate. So let's get into this a bit more. So the incentive, so it's either 5 or 10% that they're going to put in. The incentive, it's going to launch this program September 2. Interestingly enough, the federal election is in October. And they say that the first closing will have to be effective. So the closing, if you buy a house, the close date has to be November 1 or later. So this may create problems if the current federal government doesn't get in and the other party becomes the new government, if they don't want this to take place, because they're also going after other components of mortgage industry. So these are the dates. The program is expected to be ready, so you could send in applications. So you have to actually apply for this, and you can apply prior to September 2 if you want to participate. If you do, it won't work. And then the purchase of the house has to be on or after November 1. So the purchase transaction already closed prior to September 2 cannot be considered under this program. And interestingly enough, so this is an update, and there's another update that we're going to have to do, because when this program launches, they're going to share more details at that time. So looking forward to updating again. So subscribe below if this is important to you and you want this update when it comes out September 2. So CMHC, they are going to, if you're buying a new home, so it's like a pre-build type of a home, new construction, new constructed home. Originally they said it would be 10%, and now in this update they're saying it's either 5 or 10%. Now the details, whether it's 5 or 10, I don't have that right now. I think that'll be part of the next update. So if you're buying an existing home, so basically a home for resale, they're going to participate at 5% of the purchase price that they will add in as an incentive. So the government of Canada, this is how it's going to work. They're going to share, they're not going to charge you interest, but when you pay it back, they're going to share in the upside or downside of the property's value. So the property's value. Also, and I'll share more about that in just a second, but I just want to let you know it's going to be considered a second mortgage. So your first mortgage, you're going to probably do it with a bank or a trust company or a credit union, and that'll be the first mortgage. It'll be registered as a first mortgage, a lien on the house. Then CMHC, the government of Canada, they're going to have registered under CMHC a second mortgage for the total amount of the incentive. There's going to be no principal payments on that second mortgage. There'll be no interest on that second mortgage. You can pay it off anytime. You must pay it off if you sell the house. And then it's a 25-year term. So this second mortgage will be set up as a 25-year term, and at the end of 25 years, the money is due. Now, remember I told you the government, they'll participate in the upside. So let's say you buy a house and you live in it for 25 years, you were in this program, and then the house quadruples in value. Well, you're going to pay either 5 or 10% back to the federal government at that time, at the end of 25 years, of the current market value if you don't pay it back prior to 25 years. So I'll explain a little bit further. So basically, they're going to want the fair market value. They're going to want their percentage of the fair market value. They're not going to charge you interest, but if real estate takes off over the next 25 years, it's going to be a big cash cow for the government of Canada. So this is how it works. So if your incentive is 5%, and it's 5% of 200,000, let's say, which is you got 10,000 as an incentive, and when you sell or when you pay it back, the fair market value is 300,000. So you're going to pay back 300,000, or you're going to pay back 5% of 300,000, which is $15,000. All right. So if the market value triples or quadruples, you're going to pay 5% of whatever it happens to be at the time that you pay it back. So if your incentive is 10%, same thing. 10% of 200,000 would be 20,000. And if the value drops significantly, which let's say drops down 150,000 when you pay it back, you just pay 10% of the current market value, which in this case would be $15,000. All right? So the incentive would be available to first-time home buyers who have a household income of $120,000 or less. If your household income is more than that, you can't participate. All right? Now, 4 times the value of the home, the insured mortgage, the value of it, of the incentive cannot be greater than 4 times the annual household income of those who are participating in this. To see numbers on this, watch my last video that I did November 20, and the link is below. I get into the numbers with more specific detail. If that's something you want, go to that video. So who can participate? Well, if you're a Canadian citizen, you can. If you're a permanent resident of Canada, you can participate. And non-permanent residents who are legally authorized to work in Canada can participate. If you're not in one of these categories, then you cannot participate. All right? So those are the only 3 who can participate. I want to show you this. This is stats from England. Over in England, and they launched this type of a program as well, where the government participated. And the red lines, all of these, the red and yellow, they represent different cities that are in Europe, or England, in England. And it's 2018. So any particular city, so here's London. In red, it shows those who did not participate in the incentive program, but they were first-time home buyers and they bought a house. The value of the house, on average, is lower than those who participated in yellow. In yellow, those who participated in the government incentive program in England. And so, across all these major cities in England, the stats show that those who participated, on average, bought a much more expensive house. The dollar value is listed here, but it's a fair bit more that they bought. Now, I don't have the exact details of that program, but just to show you that stat. Now, my advice for you would be, if you're looking to buy a house in the spring or in the fall coming up, is to seek professional advice of someone who understands this program and how it's going to work. If you're in the Greater Toronto area, I'd be happy to have a free consultation with you to assist you with this. But this is very helpful, hopefully, to you, and we're going to do another update when this program launches. So listen, have a great day. Thank you so much for being with me. Subscribe below if this is important to you, and we'll talk to you later. Bye now.